A very good evening to all the investors who have joined here for today's event and welcome to the session. Due to some discomfort in our founder Dr. Mohit Batra's eyes, he was not able to join the event last minute. And I know this was a bit last minute and many of the investors have come and joined for today's event. But I would not like to waste your time. What we would do is we will cover the latest stocks that have been added in the strategies. And today's event of having the full recap of the MojoOne strategies will be happening on Monday. So in case many of you all have joined, I understand that a lot of alerts must have come to you in this event. We'll still cover the new stocks that have been added in our MojoOne strategies. And the original event for today, which was supposed to be scheduled, which will be scheduled on Monday around the same time, and you'll also be getting an update on that. So let's start off. We'll just cover the latest additions across our MojoOne strategies, which stocks have entered, and if any stock has exited in the last 1 week. We'll also be having a detailed Q&A if any of you all have any questions about stocks. You'll have a particular stock or any particular stock which has entered the strategy. What should be your next move? We can have that in our Q&A session. We'll just simply cover the 4 stocks first, which have entered our MojoOne strategies. Starting off with a disclaimer that all the information presented in this webinar should be used as a resource to enhance your own research and understanding. Investment in securities is subject to market risk. Past performance should not be construed as a guarantee for future returns. Investments in equity and equity-related securities involve a high degree of risk. Only invest funds you can afford to lose. Before I move on, just a quick announcement to make. We've been running this webinar offer for close to 2 weeks now. And as you know, with Christmas Eve happening today, these links will now be shut very soon. We had introduced these links only for a very limited period, and many of the investors joining the event might know that we've never given such prizes, including Stock of the Week plus MojoOne, which comes up to around 34,999. You're just paying for 1 year at 14,999. Plus, we are giving you 2 years free, very close to an 86 to 90% discount. We are closing these links soon. If you're looking for India plus US access, you also want to invest in the US markets, it's a great time. Many of the brokers are now also supporting US access. Only at 19,999 for 3 years. You won't, even if you compare this with any other advisory, you won't get this cheap rate, and this attractive rate is only available for the people attending the webinar. You won't find this on the website. Lastly, this link will be closing today. We've got and filled up enough of the slots. There were a lot of special requests for investors who have MojoOne for many years, 5 years, 10 years, and 15 years. And you did not want to, extend for another 10, 15 years for your MojoOne plan. So instead, you can use this link for the US plan and pay for 1 year and get 4 years free. It comes up to around 19,999. Okay, for 5 years of US access, as attractive as 4,000 per year. This link would not be available after tonight. We are shutting this link today on Christmas Eve. The rest of the previous 2 links will also be closing very soon. Okay, so coming to today's latest additions of the week, we'll be covering new stocks that have been added in these 4 strategies. Okay, for some of the investors who joined in a bit late, we were supposed to have a recap along with our founder, but that event would now happen on Monday. Since many of you all have now joined in, I'll take you across 4 different stocks that have been added across Mojo stocks, hidden turnaround, momentum now, and reliable performance. Yesterday, we had a detailed event where we were actually looking at a story of how a particular stock moves from a hidden turnaround, momentum now, towards a reliable and finally becoming a Mojo stock. Today, the 4 stocks which I've entered, we also have 2 from hidden turnarounds. So just keep an eye. We'll also go on the site and analyze these stocks to see if that story also continues and whether you all can think about investing in them. To give you a small brief on what happens in these 4 different strategies, we have Mojo stocks which are the best across all the 4,000 stocks. Our top 1% picks, very stringent entry criteria, followed by hidden turnarounds. Hidden turnarounds, if you have a look, there are many sell-rated hidden turnarounds because they are just at the start of their wealth creation journey. These are still undervalued companies and showing early signs of business recovery. Following up to momentum now, these stocks are enjoying fundamental and technical momentum. They might not be of great quality and showing long-term financial performance, but they are currently enjoying momentum in the market. Lastly, we have reliable performers. The thing about reliable performers in the last 2-3 quarters, these stocks have showed consistent performance. Right? So let's dive into which of these stocks have entered this week, the 4 new stocks. Before that, this is the summary of all the entry and exits happening this week. I remember many of you are also requesting me cover stocks which have exited. This week, no particular stock has exited from the strategy, but yes, one Mojo stock, two momentum now picks, and one hidden turnaround stock has entered the strategy. Now, if you remember the story we were talking about yesterday as well, if some of you all have missed the webinar, you all can actually go on the site. But the story we are talking about moves like this, where we might see a hidden turnaround become or catch momentum and then finally becoming Mojo stock. We'll talk about the four different stocks that have entered. What are they? Why have they entered most importantly? And whether you should consider investing in them. This is the portfolio strategy diversification. We also show this particular slide where here if you see many of the strategies are tilted towards small caps. Okay, with Mojo stocks we have large mid, with hidden turnarounds we have many small and micro. Okay, momentum now is a mix of mid cap but mostly micro caps, and here again in reliable performers we have mostly small and micro caps. So one is that these three strategies, yes, they are more volatile and risky, and since they also have many small cap stocks, you should tread with caution when you're going about investing. But if you want a safer bet, do look at today's Mojo stock. Here you can see this particular strategy has more of large and mid cap players as well. We'll dive into this a bit more deeper. If you have any particular question as to what happens with these strategies when the stocks enter, we'll also go on the website and cover them. Starting off with the first new stock that has been added in our Mojo stock list, which is Mass Financial Services. Added on 18 December 25, it's an NBFC company from the small cap space. Okay, it's a Gujarat-based retail NBFC, technology-enabled NBFC specializing in retail financing for lower and middle income groups. It has a strong presence in Tier 2 and Tier 3 cities, and it offers commercial vehicle finance, MSME loans, housing finance, and business loans. Now, the key points to focus on this particular stock: 18% year-on-year growth, currently a 13,821 crore AUM. Right? Strong asset quality, its gross stage 3 assets is just 2.36% of its AUM, which is quite a low and a good number. Finally, the capital adequacy ratio, which these NBFCs are supposed to be maintained, is well above the regulatory requirement and is at 26.5%. Now, understand it's a small cap company, but still, if you look at the size of its AUM, okay, keeping its gross stage 3 assets at check and also a well above regulatory capital adequacy ratio, it makes it a good stock and also a good stock to actually enter our Mojo stock list, which is the best from of 1% from all the 4,000 stocks we cover. Now let's dive a bit deeper into its financials of the recent quarter and also compare it with, let's say, last quarter and the last quarter in the previous year. Here you can see there's growth quarter on quarter, not major growth, close single digit growth of 3 to 4%. But year on year, the company has grown its revenues by 25% and net profit by around 17%. Here you can see over here from 77 crores, the company's net profit has moved to 90 crores. Okay. Portfolio expansion as well, we covered this first point, 18% growth in its AUM. Okay. And also its disbursements around 3,259 crore during the quarter. Margins, yes, the company has faced some pressure. Its operating margins has declined to 72 from 75%. And the reasons for this is the rising fund costs and competitive pricing pressures by other NBFCs in the space. And we've seen other NBFCs also, have a very competitive pricing. NBFCs as a theme has also been entering in 24 and 25. But yes, this company has done well when you look at its top line and bottom line growth. So now, if you're looking at adding a strong small cap stock in your portfolio, okay, Mass Financial Services is a great bet. Please understand you should not be holding a lot of NBFCs and financial stocks. Many stocks which have entered Mojo stock, stock of the month, and stock of the week were all many finance and NBFC stocks. So if you are already holding a lot of them, then you should think before entering this Mass Financial Services company because your sector allocation might breach its limit. But if you don't have much exposure to NBFC, then Mass Financial Services can be a great pick. It's entered our Mojo stock list. Talking about the stock which has entered hidden turnaround. And as you know, hidden turnaround is one of the strategies where we look at a stock which was showing, let's say in loss, moving towards a profit phase, okay, and showing early signs of business recovery. This stock entered on 22nd December from the minerals and mining sector. Once again, a small cap company. Orissa Minerals Development Company. Okay, it's a public sector undertaking under the Department of Steel and Mines, the government of Odisha. Incorporated in 1956, it's one of India's oldest mining companies engaged in exploration, exploitation, processing, and marketing of minerals. It's one of the iron ore leaders. It operates six iron ore mines and ranks among India's largest iron ore producers and primarily supplies the domestic steel industry. Manganese exporter as well, serving markets in Japan, China, South Korea, and Taiwan. And a diversified portfolio produces bauxite, limestone, and chromite alongside its core iron and manganese operations. Right, four main business lines: mining, beneficiation, pelletization, and marketing, with integrated operations spanning exploration, extraction, processing, and distribution of mineral resources. Though it has faced significant operational and financial challenges in recent years. Now, looking at the financial results of this company, this is what we're talking about when it comes to hidden turnaround. 0.79 to a loss, but here this loss has turned around finally and entered the profitability phase. Yes, its revenue, it has been its highest, I think 25.30 crores is the highest figure it has seen its revenues. Yeah, highest quarterly sales figure. But this is the growth we're talking about when it comes to a hidden turnaround of the company from this entering into profitability. What I'll do is I'll just take you out to the website because to give you a better clear of how it works over here. So now it's currently strong sell. What might worry you is that okay, it's a strong sell, why are we recommending it? Please understand we're trying to recommend this to you in the start of its journey. It's up by 1.42% today. And I'll simply also take you to the recommendations to show you all the rationale behind why we're recommending it. Right? The current quarter which it has seen, September 25, is 14. And this 14 has come from a minus 15. Okay, previously minus 26 to minus 15 and finally a 14 positive trend. Price, if you have a look over here, the stock's price fell as the negative financial performance came in. There is some stabilization here and there's a slight uptick over here from 4,800 has come to 4,900. So you're entering at a very early sign. What is your probability that you might make profit is if it follows last time similar financial improvement. For example, in Jan 23 to July 23, the stock was in negative. Right? Let's go back 2 years. Then it moved to positive at 6. Then it moved to 25. What happened at that time? The stock's price, which was trading at around 2682, went right up to 7,386. So this company moved up much faster than the market, but we're talking about a very good 200% returns, I know, much higher than that. Then the company kept moving ahead, but then again it entered the loss-making zone. Now we are seeing that same curve happening, right? What happened back in July 23? The probability of you making profit, or let's say, whether the stock would be a wealth creator totally also depends on how the next few quarters will turn out to be. If this 14 turns to 20 to 25 to 30, then we might also see a good growth coming in with its current 4,904. The company has seen prices of 8,700 and much more, 9,327 just 1 year ago. Right? So we're not catching it at a very high range. They're catching it at a bottom range. And there is potential when if you look at each of its financial indicators. For example, profit before tax quarterly, it was minus 43 crores, minus 4.45, now currently at 2 crores. Operating cash flow also has given a positive factor over here, where from minus 60, it's now turned to 170 crores. Net sales is the highest. Operating profit is also in positive currently. So there are many factors why it gives a strong reason for entering this stock, even though it's at a riskier strong sell range. Okay, I'm trying to make you understand as to why have we entered this time. And I'm also giving a slight idea. See now, what happened in the past might not happen. What happened here of 2,676 moving up to its peak of 9,110 might not happen. But yes, you're entering with that risk, understanding that if this minus 15 has become 14, if let's say 14 becomes 25 and the company continues to do well, definitely we will see a good price appreciation for the stock. So the return potential is heavy. If you can also look at the risk versus return to get a better idea. Right? So the company is a medium risk but a low return stock in the last 1 week. Last 1 year, if you see, the company is a low return but a high risk company. It has faced a lot of volatility, but returns has been low. Right? Last 3 years, if you see, again it's not given much returns, but it has been volatile. So you are taking more risk, but the return potential can definitely be good for Orissa when it is development if the financial trend sees further improvement. Now, just to give you an idea, in the last 1 week, the stock has moved up by 4%. The minerals and mining sector has moved up by 1.6. So it's just showing that improvement. Last 1 month, it's moved along with sector. 3 months, it should be negative. Yeah, 3 months, it's a negative, but still better than the sector as a whole. Last 6 months, I'm reading this card over here actually. Orissa is actually, it's done better than the sector in the last few months. Sector is facing pressure, but as I said, if the fundamentals keep improving, if this profit of 3.14 crores stays up, let's say it moves to the next 5 crores or starts improving. If let's say 25 crores stays stabilized or moves up further, then this can be your multi-bagger recipe of holding this stock. See, if this turnaround stock continues to do well, it will catch momentum. If that continues to do well quarter on quarter, it will catch to be a reliable performer. And then we are slowly looking at the stock entering Mojo stocks. But this is still a story. We are entering at the very early stage. So please keep that in mind while talking about Orissa Minerals Development Company. Now we are moving to a different strategy. The two new stocks that have been added, which are in momentum now. Okay, we have GE Power and SG Finserv. Right? Both of these stocks are small cap. GE Power has entered on 23rd December, and SG Finserv is an NBFC which has entered on 18th December as well. Right? GE Power is a heavy electrical sector company, and SG Finserv, as we covered, is an NBFC. Now understand, if you're also entering in SG Finserv and you're entering in, let's say, Mass Financial Services, you have to make a particular call over there because both these stocks belong to a very similar sector. Okay, so if you're making that call, please take that into consideration as well. Okay, I'll first break down GE Power. Talking about GE Power India Limited, it's a power generation equipment and services. It specializes in engineering, procurement, and construction (EPC) of key equipment for mostly thermal and hydropower plants. It has strategically shifted focus towards its core service, which is something always well enjoyed by the market. We see price appreciation when a company focuses on its core services rather than diversifying where we see the price go low. But that is also case to case. But it's focusing on its core services, including upgrades, modernization, and aftermarket services. Strategic restructuring, demerging boiler manufacturing business to JSW Energy to streamline its operations. Core service focus, executing FGD order backlog while expanding high margin service oriented business model. And it also had a legacy resolution with Bharat Heavy Electronics Limited for 3,400 crore in phased payments, which will continue until March 26. Now let's look at the financials. Now please understand over here, the financials quarter on quarter are not that great. And if you just look at the financials like this, you will not get a true picture. I'll tell you why. Second quarter of FY25 has an exceptional gain. If you remove this exceptional gain, this will drop down to around, I think, 26 crores. Right? And exceptional loss of 12.78 crores over here. So if you adjust this loss over here, it will move on to around, I think, 44 crores. So 26 to 44 is the right comparison you should actually look at when you're looking at this particular net profit, because we are adjusting for the exceptional items. If I adjust it like this, yes, this will be extremely good. So I know many of the investors might have this question in mind, why are you recommending this stock if the net profits are going low? But that was more of an exceptional item which has to be accounted for. Operational excellence, EBITDA margin expanded to 17.7% from 15.2%, reflecting better execution, operational efficiencies. The revenue grew 29%. Order momentum as well, 45% quarter over quarter order growth in core services. Order backlog at 1,825 crore, down 28.7%. This is due to its termination of two FGD contracts. Next up, we have SG Finance Finserv Limited, MSME supply chain financial specialist, digital first platform, 100% digital lending platform with proprietary credit scoring, automated invoice disbursement, and loan documentation serving 1,000 plus MSME customers. Strategic partnership as well. It partners with Tata Group, JSW, MG Motors, Vedanta, Adani Group, some of the big names, and others with MOUs aggregating to 6,550 crores. It has a pan-India presence, operations spanning 25 locations across India, including major metro and industrial hubs, backed by high-profile investors. Here, if you look at its second quarter FY26 results, 31 crores of operating income has moved to 75 crores. Operating profit has also improved, and net profit has also improved. So both quarter on quarter and year on year, we are seeing an improvement for this particular company. It's delivered exceptional second quarter FY26 results, net profit surging close to 101%. Even the EPS increased to 4.26 from 3.67% quarter on quarter. I can also take you on the side to give you an idea of, when we talk about momentum stocks, what actually happens. Now, you please understand it's a whole rated company. But when we talk about momentum, we are just focusing on these last two indicators, financial trend and technicals. Both the financial trend and technicals, the financial trend has been outstanding for SG FinServ. Technicals is currently mildly bullish from bullish. So its price movement is slightly losing momentum, but it's still in the mildly bullish range. Right, last 1 week it is actually flat. Last 1 month positive, year to date flat. 1 year it's a negative. But yes, we are focusing on the last two indicators over here for SG FinServ Limited. Quality is below average for this company, and this usually happens when a company over the longer term has not done that great with regards to growth in revenue, growth in profit, and all these factors. So I can also take you to the quality if any of you have concerns that it's a below average quality. Sales growth is good, net EBIT growth is good. So this is not the problem. Net debt to equity institutional holding is lower at around 4.22. Right, the management risk, which combines more, is actually at the red level over here. But the growth and capital structure is good. Okay, it ranks 96th out of the 633 companies in the NBFC sector. Valuation is still very attractive at this range. Right, the PEG ratios should be actually around 1, but it's at 0.83 over here. Technicals, as I said, mildly bullish. Financial trend is outstanding for this company. And you can see over here, the last 5 quarters, if we have a look, initial 3 were in negative, which has moved to 7 and moved to 31. So I'm not saying a turnaround to be specific, but yes, it is showing some signs of turning around with regards to its financial trend. Right, to see a turnaround, we need to see if the company is making loss, then move into profit. But in this company, the company has been making profit. But yes, it is showing improving signs of profitability and sales. 250% loan book growth, year-on-year expansion to 2,878 crore. 39% disbursement growth. Return on assets 4.5% annualized, return on equity 10.7%. Net worth at 1,071 crore. And it's financed over 4.25 lakh invoices cumulatively. Loan book target 3,500 crore by FY26 and its long-term target is 6,000 crores. It also has a new Android customer mobile app launched. It's also having an AI credit monitoring tool to be launching in this particular month. So that's it with these 4 different stocks that have entered our strategies this time. If you'll have any question whether you all should add these stocks, you can simply drop it in the chat box. I know some of the investors are coming into the webinar a bit later and asking where is Dr. Mohit. Dr. Mohit couldn't join today's event. He has a minor issue with his eye and some discomfort. So last minute, he wasn't able to join the event. But he's asked me to come and at least talk about the 4 new stocks that have entered our strategies. Now, please understand the event which was supposed to happen today is way more different than what I've been talking today. Today was just the 4 new stocks which have been added in our strategies. This is a weekly recap which we always have. But the event which will happen on Monday, okay, where our founder Dr. Mohit Batra would be talking about a full recap of all the MojoOne strategies and many other interesting points. That will definitely happen. I know many of the investors are asking me where is Dr. Mohit, but I had to step in for his place and cover these 4 different stocks that have been added. But regardless, all the questions you all have been dropping in the chat box, we'll be picking each of them. I'll try my best to answer them. Before I open the floor to the Q&A, please understand this particular pricing of 14,999 for 1 plus 2 years free. Many of the old investors who've come for our previous webinars in COVID also would have vouched for this. We've not given these low rates. Last time when we used to give 14,999 for 3 years, back in I think 2020 was just MojoOne. But you have stock of the week as well. You're paying 14,999, 86% discount. Just for 1 year the price you're paying, you're getting 2 years free. The link is available below the video. If you're looking for India plus US access, Many of us are talking about investing in US stocks as well. We have analysts on all the US stocks. There are verdict reports, switcher reports, stock of the month, and the same strategies we discussed also for US companies. You pay for 1 year at just 19,999 and you're getting 2 years free. This is the highest discounted offer, not available on the site, only on the link below this video. Lastly, because of major requests by our long-term members who are subscribed to India plan for like 15 years and 20 years, if you don't want to extend your India plan, just simply extend your US plan. You pay for 1 year at 19,999 and get 4 years free, all of USA features. So that's 19,999 for 5 years in totality and 87% discount. This link though would not be available. We are cutting the period at around 12 o'clock today. Max will be holding it up and then this link will shut. With that, let's move on to the Q&A session. I'll try and see what all questions you all have been asking and if I can pick them up. This one by Balsundram. Thanks to the webinar, Chennai Petroleum was recommended as stock of the month. Specifics of why it was recommended. The current price is 848. Any reason why this is steep for the 15% in such a short time, even though the fundamentals are good? Are we missing something? Okay, so I'll just take you all to Chennai Petroleum as well. Let's dive a bit more deeper. It's currently still 77 at buy. It's part of the stock of the month strategy as well. We'll also look at it in the stock of the month separately. Okay, these are the open calls over here in one screen. Okay, this is the stock we're talking about. 10th November 2025, so it's just been 1 month since then. It's down by 15%, yes. I don't think we can also look at this particular sector as a whole along with this. So let's say 1 month period we're talking about. The oil sector has been flat. Yes, CPCL has fallen more at 13.68%. I don't think there's much concerns to be there about. We need to give the stock some more time. Also, you must have seen the pattern of stock of the months as well, where we recommend a particular stock, but it takes some time for that stock to also move up. But yes, if it remains in the strategy, definitely the stock will continue to make good gains. Nothing major to be worried about currently. Uh, we are monitoring this stock. If in case we are required to exit, we'll definitely drop you a mail. It's currently still at 77, very close to the buy, a strong buy range. It moved from strong buy to buy. So yes, the score did get downgraded, but it's still in the buy range. Right, it's also in the top three when you look at the oil exploration sector as well. Okay, just below PPCL and HPCL. So yes, you can continue to remain holding the stock. 15% I know is a fall, but not that steep about you should be worried about. I can understand commodity based play, so this 15% recovery can happen in no time. Once the market starts picking up. So give it some time. 1 month is very less time to actually go about looking at it. We are monitoring this stock and let's give it some more time. Let's say around 2-3 months and review this again. Still, stock of the month, what I've seen, since it's been recommended, is that many stocks don't do well for like 4-5 months, but then when the fundamental story actually kicks in, the stock moves up quite substantially. We've seen that with few of the multi-baggers. Question by Bhushan Prasad saying, I already have MojoOne valid till 2039. Thanks a lot for being a long-term member, sir. What happens if I take any of the below offers? Let's say stock of the week or 19,999, will it be applicable? Yes, it will be applicable from 2042. So let's say you have Mojo until 2039 and you take any of the offers, it will be applicable to 2042. Only stock of the week, if you don't have it, it will be applicable from today itself. Right? But if you have both MojoOne and stock of the week till 2039, it will get extended to 2042. Abhay Singh, you asked a question on the Diwali portfolio. There are no changes in the Diwali portfolio. Regardless, if there's any particular change, we will mail to you. You can stick to the Diwali portfolio. I don't suggest you to change to any different strategy, but if you would like to change to a different strategy, you should definitely look at the Infinity portfolios. Okay, the Diwali portfolio, yes, there are no particular changes this week for some of the investors who've come to just hear about it. But if you would want to look at a strategy which is performing, definitely look at the let's say the early discovery Infinity portfolio. It's a mixture of all these MojoOne strategies and the way we invest in Diwali portfolio, picking stocks from all of these MojoOne strategies. You can also have that particular approach. There you would get your change on the calls directly instead of coming on this webinar and waiting for it. So if you're still invested, it's okay. But if you would look at a change, I would definitely suggest you to look at the early discovery infinity strategy, which has a similar approach. Okay, I'm just waiting for some more questions. We have this question by Ta Narsin. You're a long-term member till 2040. Please work hard on improving the IP so we can achieve the highest CAGR in long term. Well, compounding with 25% CAGR and another with 35% CAGR over a long term, like 10 to 15 years, will make a huge difference in wealth creation. Like one person having 10 crores and another having 50 crores. And that is what they call the uh, a major difference with CAGR. Even a 5 to 10% CAGR over 10 to 15 years, we know the compounding effect and what big of a difference it can make. And I like your example of 10 to 50 crores. Um, you also asked this question a lot of times, and Mr. Narsin, we are also looking at this. I'll do pass this suggestion to our team as well again. I know you're actually looking at having a very low high CAGR strategy to invest in. I'll definitely pass this request to the team and see if it's possible. Thank you so much for writing in. Amitabh Nath, I have a question on which I want to have your views. What could be the reason that, in spite of having all these great strategies, early discovery portfolios are not doing well compared to other portfolios? There can be a lot more reasons, sir, for this. I will give you some idea of it. Uh, so, when it comes to, let's say, top tier equity or mid cap, now this is based on my knowledge and please take it with a pinch of salt. I don't look much into the infinity strategies, but from what I can understand, see, one is that you need to give it some more time because, early discovery picks up stocks from MojoOne strategies. There are many small cap players in that particular strategy as well. Please understand, small cap as an index has not been able to do well in 2025. If I'm last, from what my memory tells me, I think it has a 30% or a 40%, 30% advanced decline ratio. Means many of the small caps in 2025 have not been able to do well. And our Mojo One strategies contain a lot of small cap. If I take you to this particular site, this is the portfolio breakup of all our strategies. Here you can see many of them 23%, 66%, two-third in small cap. Here it is low, but yeah, again 61%. Small cap as an index has not been able to do that well. Right? I can also show it to you over here. This is a new markets page. I don't know if many of you all are coming over here, but you see last 1 year, right? It is down by 6.41%. Last 3 months as well, it's down by 4.24%. Right? Another thing you need to understand is that early discovery contains hidden turnarounds, momentum now as well, reliable performance as well. And last 5 to 6 months since the strategy has been moved, there's not much momentum in the market. I'll be honest. Even all the stocks which have been recommended, even though they are of high quality, we need the market to also give it time and a lot of movement to happen. I wouldn't suggest you to judge in 5 6 months if any strategy is good because you might be comparing, let's say, early discovery, which is skewed towards smaller companies, to something like a top tier equity, which is a large cap based index. So, okay, let's look at Sensex for example, last 3 months. It has done 4.52% returns, which is why, let's say, top tier equity might be doing well. So you have to look at the market. See, it's good to have a context when you're comparing. Else, what might happen is that you might say, okay, this strategy is not doing well, that strategy is not doing well, but it moves along with the market. How I would like you to approach it, which is a more better way to look at, is you have this money to invest and you would invest on it basis your risk profile. Right. So let's say you can take this much volatility, just invest in early discovery or let's say small cap portfolio and forget about it. Give this in portfolio at least 2 to 3 years to move with the market. And the rest you should invest, let's say, in top tier equity, which let's say in such a market it has done well, right? But any of the strategies of small 5 6 months, very bad time to judge. You have to understand the market also we are in, sir. It's been very choppy, but yes, going forward we expect it to do well. So it can be possible. These are my reasonings. Please understand again, I'm not following the Infinity portfolios very much in detail, but whenever we have an Infinity webinar or when we do the next webinar on Monday, when we'll have our founder Dr. Mohit along with you, I would love to pick this question again. But this is something I would give from my own, personal opinion about why it might not be doing well compared to, let's say, other strategies. I'll move on to this next question. Naresh, can't you add Diwali portfolio and list of stocks, as sometime some of us didn't able to attend the webinar on Diwali portfolio? I'll see if it's possible. What happens is that many of the investors then get confused. I know you are following this Diwali portfolio, but the major problem is people who are not following then start getting confused whether this list should be followed. And we've got a lot of requests from investors, asking us whether we should follow and what particular strategy or portfolio we should follow. But in this particular webinar, definitely I'll be coming across. We'll also be sending a mail. We have a list of investors who follow the Diwali portfolio. So whenever there is a change, we'll definitely be talking about these stocks. Nagesh, you asked a similar question. Uh, Sridhar, I'll pick this question. Good evening, Joyson. I'm not Joyson, actually, he's the co-founder. I'm Jason. I work with the MarketsMojo team. Wishing you Merry Christmas. Thanks a lot, and wishing you Merry Christmas from the MarketsMojo team as well. I have membership till 2032. If I extend with 14,999, my membership will extend up to 2035. What about stock of the week? Stock of the week depends on where it till how long it's there for you. You can simply go to the your own profile page. Now, if you just simply share my screen, stock of the week is till 2028. Now, if I have to extend, it will go to 2031. And the Mojo one, if I have to extend now, will go to 2039. So it will extend differentially. Right? Nitin K. Parekh, you asked a question. You claimed to do more than 500 tests to recommend a stock. What happened with Fisher? You went on asking to hold till the stock touched the bottom. It can be possible we go wrong, sir. And it's very definitely very possible that we go wrong. Currently, the stock is sell. This stock is also moved towards this bottom, which I can see. Last 1 month it is stabilizing, but yes, it is possible, sir. It fell 40% year to date. Even though we do a lot of tests, many times it can happen there's some particular wrong news with the company, or all of these stocks we're recommending, let's say, for example, Fisher, it could be part of a hidden turnaround list. They might not perform. Even though they are fundamentally strong, they might not be enjoyed by the market. We can go wrong, it's possible. We are not claiming that 100% of the stocks would do well. But what we are trying to give you is an approach to investing, that instead of simply following a tip or simply listening to another investor, you can validate it on this website and follow the score. But it can be possible. I'll definitely ask my research team to look more into it. And I'm not saying we can always go 100% right. But whenever we go right in a very big extent. And you can ask many of the Mojo investors that when these calls go right, all of these losses you make, you'll definitely just recover it from 2 to 3 multi-baggers. In the upcoming event on Monday, definitely we'll be talking about all these different strategies. See, one thing which you all might also want or like to hear, which will be happening, which was supposed to happen today, but will happen the Monday event, is we are asking you to exit. And you might think, okay, now you asked me to exit, so I made loss. But we'll also be looking at after we exit, what has been the status of the calls, whether it has continued to go down. Because one is, yes, booking profit at the right time, and one is booking losses before you could make more losses. Right? If the stock exits the strategy, many of you all might continue to hold it, but once it exits the strategy, let's say hidden turnaround, reliable performer, momentum now, you should simply exit that stock. Right? But after you exit it, we will come across with also numbers that whether this particular stock after you exit has made more loss. So we are actually safeguarding your portfolio amounts. Right? If you'll have any more questions, definitely drop in the chat box. I know many of the investors are still asking where's Dr. Moat. I would like to make the announcement again. He wasn't able to join the event. He has a slight discomfort in his eye. He wanted to, have it, but last minute he couldn't be able to join it. Uh, I've come across talking about these four different stocks that have been added. The same event which was supposed to be happening today will definitely be happening on Monday. So Monday 7 p.m. A recap of all the Mojo strategies. Um, Harvinder, you asked, can you brief about the Discovery or Infinity portfolio? Where can we see the details? Just simply go. If you share my screen, Bashir, you can go to Wealth. Under Wealth, you can simply go to Mojo Infinity. And here, let's say you go to explore different portfolios. Now, here, if you want to understand any portfolio, let's say I was talking about the early discovery portfolio, you can simply click on view details. And here you can, definitely look at what the portfolio is, how many stocks, how is it created, generate your portfolio, look at the performance. These are for the other three stocks as well. So if you have want any details, simply go here on this section. You can see a small idea of the live performance, key information, what are the different stocks we pick in this particular strategy, and how do we go about. So as I said, simply go to wealth or go to mojoinfinity.com, create your account, and there you can simply go. I can't show you the returns right now because many of you are not signed up the disclaimer, so I'm not going to show you the returns even on this platform or the public webinar. But as I said, you can go to wealth, Mojo Infinity, and select your portfolios, or you can simply type in mojoinfinity.com and go about viewing it. Abhijit Datta, Merry Christmas. Wish you the same from the MarketsMojo team. You're subscribed till 2030. Happy to invest in the model portfolio. Lately, I've observed that frequent profit booking is taking place, which seems to be causing some hindrance to returns. I would like to understand how the portfolio can still have a stock which turns into multi-bagger. See, I'll tell you one thing, sir. If there might be, this is basis what I feel, but if there's profit booking happening currently in such a market, you need to also understand that it has been choppy. So if there's any profit happening, we're quick to actually book those profits because many times stocks which moves up in profit then drops below the profit which we could book has actually been missed. But we get your point regarding uh, not booking profits too early because there we're not able to catch multi-baggers over the longer run. You might notice that in most of our strategies we don't have a target price for that reason. BSE was also recommended by many investment advisories, but they had a 200%, 300% target price max. We're talking about BSE 500 making 770% gains. So we don't keep a target price for that reason. When you're required to exit, we will tell you that we will definitely mail and inform you about that. So regarding booking profits, we are actually monitoring it. If there's, it's hitting our calls, if let's say there's any particular change and we require to book profits, we definitely go about booking profits. But that's the reason we don't have target prices. On all these lists, we keep it open. Even in stock of the month, there's no target price. When the stock hits the target, we ask you to exit. Stock of the week is one feature where we have a target price. It's capped at around 20 to 25% for each call. Uh, Nanda Kumar, you said you're a new Infinity member. Welcome to the service. I'm having some stocks which are already in my portfolio. Should I buy the Infinity recommendation? So please don't mix these two approaches. It is good to, you might be having those stocks, keep it in your personal portfolio, but follow the Infinity portfolio the way it is asking you to follow. You will get very confused with the returns you're making. You will then write back to us saying that your portfolio is not following or mimicking the returns of Infinity portfolio. Please don't do that. Go ahead with following your Infinity portfolio the way it's been asked to follow. That other portfolio you can keep it separately. But please ensure that you're not having a lot of allocation towards, let's say, small cap in both of them. If you're aggressive, it's fine. But you need to keep an eye overall view on both. But I would suggest you're starting an Infinity portfolio. Focus on those 10, 15 stocks which have been recommended. Don't look here and there as to, okay, I have it in this portfolio, I have it in the other family account. But one portfolio you use, follow in that portfolio. What you could instead do is the other portfolio you have, you can then simply, let's say, merge that into just one Infinity portfolio. Otherwise, what might happen is you're following two different portfolios. Over a period of time, you might, instead of having 15 stocks, having 30 to 35 stocks. You're having heavy diversification happening. It's as good as let's say a small cap mutual fund then. So try to merge more of it. Have your other personal investments also merged into Infinity. Do it in phases if you're just joined new to Infinity. But my suggestion is you're following the Infinity portfolio. You follow it in one particular way. You're following your personal portfolio. Please don't mix it. You'll have a lot of confusion later, and over a period of time, you'll not be able to see the returns which we are talking about if you mix both of the strategies. Uh, Ravichandran, you asked still which year you have your USA plan. I'll just check that with the team. So it's currently not showing on the profile section, but I'll just ask someone from the team to give this to you, and I'll shortly ask someone from the team to mail it to you as well. Just give me a second. I'll drop the request. Kinson stocks, you asked that there are three aluminum stocks in stock of the month. Looks too much weightage in one commodity. I don't know if you're following the stock of the month. I mean, as in all the stock of the months. But yes, it's also an idea that we are tilting towards one particular commodity. Don't pick up all three stock of the months if you're breaching a sector. If you're breaching, I'm happy you're asking such a question. Trust me, many investors don't even ask such questions that there are many stocks in one particular sector, but you're going in the right direction, sir. Pick up just one of them or two of them. See that your sector allocation is lower than 25 to 30% overall. But if you have three, you have choices. You can pick one of them, two of them. I'm not saying that all three will move just like the index. But in these commodity plays, they do enjoy a sectoral run, across the board. But still, all three of the stock elements, if they are from one particular sector, it you can pick one or two of them. Don't go exceeding and picking a lot of stocks in that particular sector. You will be tilting your sector allocation higher. So you can definitely keep just one or two of the stock of the month stocks in your portfolio and not breach that 25 to 30% overall sector allocation. Okay, I think I've picked up most of the questions which have come in. If I'm not able to pick up any of them, don't worry, I'll ask the team to look at it. Many of the investors have joined in a bit late, and our founder, Dr. Mohit Batra, could not come for this event. He had a minor discomfort in his eye. Monday, we'll be having the same event we're supposed to be having today. I've just covered the four new stocks that have been added in our strategies. You all can watch this webinar later as well. We'll keep the link open. I know it's festive season and many of you all are either traveling or not having the time to actually watch it. We are uploading every webinar recordings. If you can just share my screen, Bashir, you go to webinars and simply go to previous recordings over here and you will get all the webinars with annotations as well. We are keeping this webinar, previously we used to not share recordings, but we've got a lot of requests coming in that you all can't watch the webinars. So we annotate them and show it over here. You can definitely simply go and watch it over here in this webinar recording page. With that, thanks a lot everyone for joining today's event. Wishing you all a Merry Xmas from the Markets Mojo team to all the investors over here. Please wish your families as well. Have a great, festive season. Looking forward to seeing you all come for the event. We might have this particular event on Monday itself. Goodbye and have a great evening. Thank you so much for joining today.